Welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to take your stock-related questions tonight are Nader from Benguela Global Fund Managers and Jean Pierre Verster from Protea Capital Management. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. I know there's been a lot of trading on geopolitical tensions, but now could we see a lot more risk coming to the market, starting off with you, JP?
Well, yes, it's not every day that Russia changes their nuclear doctrine. So definitely that has made a few people nervous. And you saw, for instance, our gold miners being higher today as people say, ooh, I don't like the sound of that. Let's buy some gold. Let's hedge our bets. Let's look for a risk asset so that if we have, heaven forbid, anything nuclear happen, at least if you live in a cave, you can have your gold in your brokerage account, and that will help you a lot when the world comes to an end. Which I say facetiously because obviously it won't. And therefore, I'm still not a big fan of gold miners. You can perhaps buy some coins that you can put in your pocket and fly out of the country and enter a new country with some gold to get you started off with. But as gold mining shares, no, I'm not a big fan, even with heightened geopolitical tension.
That's a very bold statement to make, JP, considering the price movements that we are seeing. And actually, a lot of people still maybe seeing some upside in some gold miners, including Harmony Gold. I had someone in studio for technical analysis, and they were seeing a potential upside there on Harmony. And there's actually a question, should I buy Harmony given the gold surge? Grant?
Well, I think you should generally try not to buy after the surge. But I think to be frank, if you are bullish on gold, I think you can still look at these gold stocks because they're not pricing in this gold price. They're pricing in a lower gold price. But also you need to understand why are you buying it? Are you in love with gold, or do you want to protect your portfolio? Do you want that hedge component? And I think you can have some of that. So I'm actually for that. I think it makes sense to have a little bit of gold in the portfolio given the geopolitical risks that we're facing. And I think the downside of not having it is greater than the downside of having it. And versus, so the risk reward to me makes sense given the climate that we're facing and unpredictability of the world that we're living in. So the shares are tricky because of the volatility. Just understand what you're doing and why you're doing it. I wouldn't be careful of chasing. That's the only thing I would just qualify.
Yeah, all right. Was also another interesting thing, because with the Trump trade, we have seen a surge in Bitcoin as well, where we are seeing it now maybe trying to chase $100,000. And there's a question here, should one have Bitcoin in their portfolio? I know you guys look at equities, but is Bitcoin something that is on your radar on some level, JP?
So if one has an opinion against something, I would suggest you also need to understand the opinion for it so that you can understand why you are against it. So I'm not a Bitcoin fan. I do not hold it. I believe it's an asset that doesn't have an intrinsic value. It is worth whatever someone else is willing to buy it from you at. So I'm not a proponent, but I can understand why other people are proponents. There are a lot of countries with foreign exchange restrictions, or hyperinflation, or dysfunctional economies. And there, if you have something else that you can, again, move out of your currency without being exposed to the risk in your country and the debasement of your currency, then Bitcoin is great for that. Unfortunately, it's also great for all kinds of criminal activities, so that's less positive. And you can take a view also to say that, the best asset you can own from a risk-reward perspective is the whole world. It's something of everything. That is the best risk return you can get, the most diversified portfolio you can get, because it has no esoteric risk.
Yeah.
It only has general risk. And if you think about that, because Bitcoin exists, you should have a little bit. So I'm not a proponent, but I can understand why some people say you should have a little bit of Bitcoin in your portfolio.
Yeah, I was actually also talking to a friend of mine last week, and he was also saying, you know what, the best thing that he's done is to diversify, because otherwise if you don't, you need to have nerves of steel. What for Bitcoin, Grant, what's your take there?
Look, so we wouldn't buy that for client portfolios. There's, as JP said, there's no fundamental intrinsic value, but it is worth what people are willing to pay for it. And it seems like every day more people are willing to pay for it than were the day before. It's becoming a self-fulfilling prophecy, much like gold. I mean, gold has no intrinsic utility value either. So, and it's probably easier to put a Bitcoin in your little digital wallet and fly out of a country than it is to put a couple of kilos of gold. And so it serves the purpose that gold serves, and it's more mobile. But fundamentally, I can't see a value there. But I accept that the world is accepting it, and the scarcity value and the safety of the blockchain. There hasn't been a single fraudulent transaction on the chain, I think, since inception. So there is something there that attracts people, and I think it's, if I can't tell people that you can't have it,
Oh, yeah.
Albeit the fact that we wouldn't be investing in that for our clients.
All right. Well, something also that is maybe a little bit of a polarizing stock is a Sasol. Does Sasol look attractive at 93 Rand? JP, I think the last time I had you on, it was at 95, 90, yeah, about 95 Rand. Now it's at just under 93 Rand. Yeah, attractive, but attractive enough for you to get in or not?
I think I've been asked this question at 200 Rand a share, 150 Rand a share, 100 Rand a share, now 93 Rand a share, and I'll probably be asked the question again at 90 and below 90 Rand a share. And my answer has been consistent. I believe Sasol is a value trap. I think it's very difficult to see it existing in its current form in 10 years from now. I think between carbon taxes and gas running out and coal resources in Mpumalanga getting dirtier, and people understanding the total cost of Sasol to society, not just the benefits to shareholders, means that it is a threatened business. So no, I'm not a fan.
At 93 Rand or just under 93 Rand grant, Sasol?
No, I'm afraid we probably still wouldn't touch it. We have stayed out of this one for a while, and we continue to do so for all the reasons JP mentioned. And I think it's one of those, unfortunately, where they're struggling to manage internal things well, and in addition to which the external things are going against them as well. So there's no visibility of some kind of recovery, some kind of value unlock, unless there's something that goes their way that's out of their control, like maybe there's an oil spike if the Middle East sort of explodes in and oil rallies. But that's got nothing to do with the company. So if you have a strong view on oil, buy oil. I struggle with this one. I think they are struggling, and they've got a lot of headwinds to navigate. It doesn't look like they're really on top of those challenges at the moment.
All right. Well, gents, there's a technical one here on a Boxer. The viewer, firstly, there's a big compliment for you guys. Great show. I appreciate all the knowledge and wisdom your guests have to offer. And then, there's the technical question. I've decided to buy into the Boxer IPO. I wanted to ask about the price range for the share. Please explain to me why there is a listing price difference of 42 and 45 Rand. I can't get my head around this statement. Why is the IPO not just starting off with one open price? Does that mean some institutions will get the share at 42 Rand and others at 54 Rand? And does a Pick and Pay make that choice? Is it a lucky draw? How does the price get determined? Of course, that range that we did get. JP, some insight on that?
Sure. So the price range given is indicative. They've given a maximum and they've given a minimum. And currently, it is open for people to apply. Not anyone. It's Section 96 of the Companies Act, and according to subsection 1A, it is specific investors like financial services providers that can apply. And in terms of subsection B, it's individuals that can apply for an amount not less than 1 million Rand. So those are the ones who may apply. Depending on how many people apply, Pick and Pay and its advisors will decide on the price. So if there's a lot of interest, you can probably bet that it will be at the highest end of the range. And if there's not a lot of interest, it will probably be near the lower end of the range. So at this point in time, we don't know what the price is, but I think there's a pretty good chance it'll be at 54 Rand at the top end of the range, because it does sound like there's a lot of interest. And even at 54 Rand, I believe it's quite a reasonable price to pay for such a high quality asset.
And from that criteria, I can definitely let you know that I don't qualify. I don't have 1 million rand. Grant, what is your take on this price range for Boxer?
Yeah, I think so. So what JP said is correct, and I think Pick n Pay is aiming to raise 8 billion rand plus a little bit extra potentially. So they're working they're selling as many shares as they need to raise 8 billion, and that's why there's a range. So they'll sell if the demand is at the highest amount, they'll sell less shares, but at that top price. So it's a function of where the demand is. No one's going to get special treatment. Everyone will get shares at the same price, but you are likely to get a small amount, a small fraction of what you enlist for because it's in high demand. As JP said, it's a great little asset. We've had precious few new good assets on the exchange, and I think it's also not a very big listing. I mean, 8 billion sounds like a lot, but it's actually not a lot. So the institutional demand will far outweigh the supply, and so yeah, it's going to be probably toward the top end of that range.
All right. Well, let's get into Pick n Pay specifically. There's a question: can your panel give their opinion on Pick n Pay as a buy after the Boxer IPO? Yeah, will Pick n Pay still have a portion of Boxer? Of course, that is yes. JP, Pick n Pay after the IPO?
Yeah, interesting one. So what we'll have is Pick n Pay as a holding company. It will hold the majority of Boxer still, even though a minority will be listed separately and be traded separately. And then the holding company of Pick n Pay will also own the Pick n Pay retail outlets, the franchise business, the supermarkets, the hypermarkets. And there's a big question how much that business is then worth. Through the capital raising, the 8 billion that Grant also referred to will go towards paying off debt. So in total, directly after the IPO of Boxer, Pick n Pay will not have any external debt excluding leases anymore. So you will have Boxer, the majority of Boxer, and you will have the Pick n Pay stores, and you will have no debt. And the question is, how much is that worth? And will Pick n Pay be seen as an investment holding company? So could it trade at a value that has a discount that is worth less than the sum of its parts, being the Boxer retail chain and the Pick n Pay retail chain? It's a tough question to answer. I would say I wouldn't be surprised if there's a slight discount because the jury is still out whether the Pick n Pay retail outlets are going to turn around from a current loss-making position to only in 2026. Management has indicated that they might get to a profitable level.
And JP, we're going to a break. Just sticking with you quickly. Pick n Pay shareholders aren't getting any Boxer shares at this point. They're just getting Boxer through Pick n Pay.
Correct. They'll have an indirect stake in Boxer via Pick n Pay. They will not get any Boxer shares.
All right. What's your take on what Pick n Pay will look like after the listing of this minority share in Boxer, Grant?
It's going to be an interesting one. I think Pick n Pay shareholders will benefit from the Boxer unbundling. First of all, there's a value unlock that's coming their way. I think Boxer will, and they still hold the majority, like 2/3 of it probably after the listing. So that will be to the interest. But the core business, I think, has still got a long way to go. There's a lot of work to be done. They are going to be right-sizing, cutting costs, moving, in the opposite direction. This is a scale game. These businesses need scale. They need pricing power. So they've got, I think, quite a bit of water to flow under the bridge. They've got a decent little clothing business, but that is still, I think it's about 12 or 13% of the business. So I personally would sit on the sidelines and wait and see, unless you find it's an attractive entry point into Boxer. It might play out through that. There might be a nice discount there with some optionality in Pick n Pay. But I don't think it's a quick turnaround. And so I think it's a little bit of a speculative play if you're going to go for the turnaround option and the underlying business at this stage.
Yeah, all right. Well, here's an interesting one. When did we get this announcement? On Friday. So this is on Mustek and Novus. Why is Mustek management happy to sell the company at around the same price that they were buying back the shares about 2 years ago? Surely they should be asking for a higher price as the NAV is 50% more. The price of the Novus share can't determine the price as it moved up a lot recently. Firstly, what do you think about that deal, JP?
Yeah, it's interesting. It's a bit technical. The only reason why there's an offer coming is because A Squared Partners through Novus effectively ended up owning over 35% of Mustek. So that means they have to make an offer. But yes, the offer is probably lower than the fair value of Mustek. And the Mustek management team are not selling their shares. In actual fact, they've actually agreed not to sell their shares in terms of the mandatory offer, whether for cash or Novus shares or a combination. They'll be holding on to their shares. So the major sellers were Old Mutual and a few other institutional investors that probably held Mustek for many years, more than a decade, and have seen the share price just go sideways and probably got fed up with it, and are hoping that that Novus can make some changes there. But the management team did not have any say. The Mustek management team did not have any say regarding the price. It's literally the highest price that Novus had paid in buying these Mustek shares over the last 6 months. That is what determined the mandatory offer, and I expect that Mustek, very few shareholders will accept it. Maybe some will go for the share swap for 2 Novus shares for 1 Mustek share. But Mustek will still be listed. It will still have direct minority shareholders, and there's still a few chapters to be written for Mustek as a separately listed company, I believe.
All right. Additional thoughts on this, Grant?
No, I confess I have no particular thoughts. I don't have. I'm not close to Mustek.
Yeah, and I know one other person who looks at Mustek closely is Alex Days. So it's going to be quite interesting also to get his thoughts when he comes on. Let's go into OUTsurance and insurers in general on the JSE. Yeah, JP, can you put them all in one basket?
No, you can put them in, I would say, 2 baskets.
Yeah.
Life insurance and short-term insurance. And in the short-term insurance basket, you actually only have OUTsurance and Santam.
Yeah.
Those are the 2 short-term insurers listed on our market. 2 of the highest quality companies, I would say, available on the JSE. Not particularly cheap at the moment, but that's what happens with high-quality companies. They rarely are cheap. And I like both businesses a lot. When it comes to life insurance, I like them a bit less. They don't have such a good business model in terms of the float and the interest income and getting your cash up front and then getting very small claims to pay out. I just believe short-term insurance is a better business model than long-term insurance with these big payouts and longevity risk and all the other risks you have. So I would go for the likes of OUTsurance and Santam, but maybe not at this price.
But actually, I mean, you do have, for example, Sanlam that has been showing very, very solid numbers there. Yeah, Grant, at this point, OUTsurance, and maybe if, you know, there'd be a difference in how you view the life insurers versus the short insurers on the JSE?
Yeah, you definitely have to view them differently, but I think they all are, there's some good companies there. And Sanlam, I think, is really operating well. They've done a great job through Africa with their partnerships. They've got a lovely little asset in India, and they're doing really well at home. So I would own Sanlam. Yes, it's priced well, but as JP said, it's a quality business, and you don't. If you're only ever going to wait till you get quality cheap, you're not going to have a lot of quality in your portfolio. So I would own Sanlam. I would own OUTsurance. I think it's also a very high quality business, and what they've got is they've got this growth avenue that not all of the South African companies have. They've got a lovely Australian business, and they're now moving into Ireland, which should start to grow in the next couple of years. They should go through that investment cycle, start to see the returns there. And I think they've got a really good business model and a good management team. So I would be willing to pay up a little bit for these good businesses.
Yeah, all right. Well, JP, something you won't be paying much for is transaction capital. And somebody's asking, could you ask JP if transaction capital is still a hold?
I'm still holding it. It will soon be renamed to Newton. So then we won't be talking about transaction capital anymore. I still think it's actually too small to be listed. So I was hoping for a management buyout. So let's see, maybe that can still happen. But it's not a bad business, and they've really cut back the costs at the head office. So if they can keep a lid on costs and Newton can start growing again, now it can access bank funding after they solve the issues they had because of SA Taxi, then Newton itself can show some decent profit growth. It's a reasonably good business to go after debt of the banks, sometimes as an agent, sometimes as a principal if they buy books. So it's not a bad business. It's just a little bit subscale. So let's see. But I would say it's still a solid hold for me, at least. Yes.
Yeah. All right. You've been sticking to your guns here, JP. Grant, because I feel like there's a camp where some people have really stuck with it, but then some people who just have not looked at it since it's changed its structure. Which camp are you in here?
I'm in the don't touch it camp. I think the way the whole drama unfolded, I have no confidence in the so I'd rather stay away.
Okay, all right. Yeah. Well, AB InBev, please can you give me the medium-term outlook for Anheuser-Busch InBev, JP?
So apparently Generation Z are not drinking that much alcohol as Generation X and millennials and boomers used to.
As us, yeah.
Yes, so that's not very good for AB InBev. So in general, what you see is the volume of alcohol that they sell, of beer that they sell, is decreasing, but they're pushing the price, so they can still make more money, more dollars per hectoliter, as they call it, and going for premiumization, so asking more money per bottle of beer that they sell. And I think that strategy has its limits. AB InBev still has a lot of debt that mostly came onto the balance sheet after the SAB Miller acquisition. So with a struggling top line, a lot of debt, and now the benefit of lower interest rates also behind us, I'm not a fan of the business. It's a very strong business, but it's not a very strongly growing business.
It seems that, JP is very much aware of the risks that maybe could limit the growth here. Grant, on your side?
Netflix and chill. That's what they're doing on Saturday nights instead of drinking. So, no, I think agree. It's not one that we're fond of. I mean, for all the reasons, I don't see any path to growth. I think it's going to be a slow grind for them for a long time. And of course, you're still sitting on a whole lot of debt, so the return to shareholders is limited. No, I think there are better opportunities elsewhere. It's becoming a little bit like the tobacco companies, but they don't have the ability to transform into new products to the same extent that tobacco does. So the new generation products are the lifeline for tobacco, and I don't see that in these AB InBev in the beer business.
All right. Well, gents, let us get to your stock picks for today. JP, what are you choosing?
So Zenati, something different tonight. I normally pick an individual company. Tonight, I'm picking an ETF. But there's a good reason for it, and that is that this ETF, which is a MSCI Greece ETF, so it's a bundle of shares all listed on the Athens Stock Exchange. 2 of the holdings are listed somewhere else, but they're basically all Greek companies. And it's not so easy buying shares on the Athens Stock Exchange. A lot of brokers dropped Greece after the European crisis we went through roughly a decade ago and thought, no one will be interested in Greece. But, after a decade, things change. So where we are right now, if you look at that index and the biggest components of that index, about half of it is Greek banks. And the Greek banks have really come back to the fore. They've repaired their balance sheets. They are very cheap, but they're nicely profitable. And then a bunch of other Greek companies. You have some utility companies, some oil and gas, some telecommunications, a cement company. And this bundle of Athens listed companies is extremely cheap, difficult to buy directly, but you can buy it with this ETF that's listed in the US. So it's a nice way to get exposure to Greece and specifically Greek banks that are very cheap but are in a very solid position, I would say.
All right. Grant, where are your eyes on today?
So I like PSG Consult. I really like that wealth model, and I feel it's like a business for all seasons. So if we see the continued improvement in SA and things play out favorably, they will continue to gather, assets under management and advice, and the insurance business as well, that's doing nicely. If things get, sort of disappoint and we struggle a little bit, the money's going to continue to flow offshore, but it's going through their advisory channels. And I just think that they're very well positioned. They've done really well, and I think they're going to continue with the strong momentum, and they've got a really smart business model that I like. So that's my pick.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Grant Nader from Benguela Global Fund Managers and Jean Pierre Verster from Protea Capital Management. Up next, The Close. Stay watching.